way I also interpret it is that when you don't have much money, or when you don't have a huge financial understanding like my friend, you end up playing the really boring money games.
Yeah.
And when you have a huge financial understanding, you probably also spend a lot of time playing the boring money games. And by boring money games, I mean index funds.
Yeah.
And the S&P 500 versus like crypto.
Yeah. I think you'll see that in investing, that like the absolute layperson will invest in index funds, and the extremely experienced Wall Street veteran will invest in index funds as well. And it's a person in the middle that just has like a little bit of intelligence, a little bit of experience, a little bit of information, that's trying as hard as they can to outperform the market.
Ultimately, the book, if there was one overarching lesson it taught me, was that like patience and more boring investing is the way to build my wealth over the long term. And that like all other strategies have hidden trade-offs which lead you to being broke.
Yeah. I think there's a truth too, that like there's an optimal level of intelligence that you want for investing, where you want to be smart enough to understand the basics, but not so smart that the basics bore you. And a lot of people get so smart that they're like, look, index funds, compound interest, it's too boring. Like I need something really complex to satisfy the intelligence that I have. And I there's a sweet spot where, like for me, I'm just like, oh, index funds and compound interest, like that's kind of as high as my intelligence goes here.
Mm-hmm.
But I think the truth is that is the best position to be in. Smart enough to understand the basics, but not so smart that they become boring to you.